A very good afternoon to everybody, and thanks for joining into the call. On behalf of Quantum Securities Private Limited, we welcome you all to the Q1FY21 post-results conference call of Housing and Urban Development Corporation Limited. We have with us today the esteemed management team of HUDCO, represented by Mr. M. Nagaraj, Director Corporate Planning, Mr. D. Guhan, Director Finance, Mr. D. Subramaniam, Senior Executive Director Operations, Mr. Harish Kumar Sharma, Company Secretary, Mrs. Reva Sethi, General Manager Finance, Mrs. D. Shefali Sudhakar, General Manager Finance and IRO, Mr. Achal Gupta, Joint General Manager Finance. I now hand over the conference call to the management for further commentary. Thank you, and over to you, sir. Hello.
A very good afternoon to all. So on behalf of HUDCO, I extend a warm welcome and greetings to everyone present in the investors meet today. The unprecedented pandemic crisis has not impacted our spirit, and it is indeed a matter of great joy and pride to share the highlights of HUDCO's financial performance for the Q2 amid COVID-19 crisis that has shadowed entire Indian economy. Financial year 2020 happened to be the HUDCO Golden Jubilee year as well. We have recorded outstanding financial results, witnessing a 45% growth in the net profit that has set an all-time high of 1708 crores from 1180 crores in the financial year 2019. The brief highlights for Q2 is revenue from operations during the quarter is rupees 1,773.91 crores. Profit before tax during the quarter is 270.88 crores. Profit after tax is rupees 203.43 crores after making a provision of 243.06 crores made on a loan as per ECL method, as against 335.68 crores during the corresponding quarter in the financial year 2019-20. Gross NPAs as on 30th June 2020 is 4.33% and net NPA is 0.57%. HUDCO has made a disbursement of loan to the tune of 2,285 crore during the quarter, out of which 2,200 crore was on account of housing projects. We have mobilized resources to the tune of 7,270 crore from multiple sources at an all-time low weighted average cost of 5.67% vis-a-vis 7.53% in the corresponding period last year. During the financial year 2021, HUDCO's emphasis will be mainly on housing, smart cities, urban mobility, in line with the government's vision. Out of total loan portfolio, government borrowers constitute about 96%, funding to the housing sector constitute about 58.67%, urban infrastructure constitute around 40.94%, and our retail portfolio, that is HUDCO Niwas segment, constitutes around 0.39% of the total loan book. HUDCO continues to have robust liquidity and fund profile. The company continues to maintain adequate liquidity to meet the repayment obligations as well as operational requirements. The company also continues to maintain its impeccable track record of servicing its liabilities in time without any instance of neither delay nor default. Further, we have also not opted for moratorium from our lenders. The management as well as all the officials on a roster basis have been working since April 20. The extent to which COVID-19 pandemic will impact the company's future results will depend on developments in coming time. However, since HUDCO operates in the space of providing financial assistance predominantly to housing and urban development sector, catering to the government and government agencies, the company believes it holds a much stable asset class which can withstand the pandemic relatively better compared to with other classes. The detailed financial results and management presentation are available on our website and have also been informed to the stock exchanges on 14 September 2020. I'm sure by now you would have already gone through the same. Now I leave the floor open for questions that you may have. I have with me Shri G. Guhan, Director Finance at Co, along with my multidisciplinary team to address any of your queries. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prashil Shah from Capgrow Capital. Please go ahead.
Hi. Just wanted to get some. Can you just throw some light on what the provisions that you've taken of around 250 crores? Can you just throw some light on where exactly these provisions have gone, what segments, and what is your outlook on the restructuring that the government has announced?
Can you please come again? Can you please be a bit louder?
Yeah, just wanted to get a sense on where these provisions have been taken of around 250 crores, where exactly, what segments they have been taken for, and your future outlook.
Provision of 250 crores. See, as far as the additional provision is concerned, SATCO is lending only to the government institution since 2013. Our 96% of our portfolio is in the government sector, and it's a well aware situation by all the state governments are under stress because of this pandemic and the shrinkage of the economic activity. The revenue generation is got affected. So two of our borrowing agencies, one in the state of Chhattisgarh and another in the state of Rajasthan, have flipped into a fresh NPA. So on that, we have to, under the ECL method, have to create the provision. And the Rajasthan agency has come out of the NPA as of today. It has been upgraded. But the Chhattisgarh agency, which is basically the Naya Raipur Development Authority, it is an area development scheme with further construction of the housing units to be sold. So because of the slump in the real estate market, the units are not getting sold. So resulted which the cash flow is not tipping in. So this satisfies this agency has come into provision has to be created to the extent of as per the ECL. That is what is this 250 crores of additional provisioning which is created. But as I told, one agency out of the two has already been, the overdues has been received subsequent to the Q1 30th June. So in the June second, the thing which now it is in the standard category. So during the financial year, I hope to expecting that this other one should also get resolved. Depending upon the improvement in the unlocking situation and going forward, something like that.
So, just to supplement what our Director Finance has said, that the scheme was sanctioned around 10 years back. This is basically new capital city on becoming a Chhattisgarh state. So, new Raipur development, Naya Raipur. So, wherein only land action has been done and it has been a site and services predominantly. Government officers have come. Due to pandemic, there was a slow in getting the receivables. So this is a temporary in nature. By March 2021, we are sure that we will be getting 100% amount, and thereby it will be resolved.
In addition, that RBI has announced this moratorium to be given for the borrowing agencies. In our, this Naya Raipur Development Authority also, there is an overdue amount of February. If that amount is recovered, we may give the extended moratorium to this agency also. But as far as our present borrowing agencies are concerned, out of our total books of approximately 77,000 crores, 27,000 crores worth of agencies have opted this moratorium policy announced by RBI, which approximately translate into 37 to 38%, which is in line with the industry norm.
Hello.
Hello.
Yeah, and so for the moratorium, what is the change in the moratorium that you have seen over the last couple of months from when the moratorium was announced back in March? So since then, what is your sense on what is the change and how do you see it going in the coming years in terms of credit cost?
As far as the credit flow is concerned, the first moratorium was due, our billing cycle was in May. So out of our total dues of around 2,100 crores, we almost received 700 to 800 crores, around 30 to 35%. Balance went into the moratorium. And for the second billing cycle in our system, which is basically the next quarter, which was August, we almost received more than 50%. Because our quarterly dues, of around 2,900, we could receive around 15 to 1,600 crores, which was approximately 52 to 53%. So as the unlock is happening, going forward, our next major billing cycle will be in the November and then February. We hope the situation will further improve upon because the economic activities in the states have started improving and the complete unlockdown. Barring certain pockets in the various states, it is predominantly open. All economic activities have already been opened up.
Okay, and in this quarter, there were, on the sanction side, there were hardly any. There was absolutely no sanction in terms of housing, and most of it, all of it was done actually in the urban infrastructure. So, on the housing side, when do you see sort of, these sanctions and hence the disbursement started? When do you see it starting to rise?
See, you are right. First few quarters sanction was not much. But third and fourth quarter definitely it will pick up. If you could see that we already made a disbursement as of now, almost to the tune of around 3,309 crores so far, that is Q1 and Q2. So similarly, we have done the sanctions of around 2,600 crores for both Q1 as well as Q2. So we have some pipelines also, and most of the proposals are under progress. Definitely we will be making it in Q3 and Q4.
See, normally, this Q2 is dominated by the monsoon season all over the country. So normally not much of the construction activity takes place during this period. So, and Q1 because of this onset of the COVID has affected. But if you see compared to the previous financial year also, it is, it's not that, amount low as far as the disbursement was concerned. In Q1 19, it was 3,800 crores and now it is 2,200 crores. Only 1,600 crores was less, which we, like Mr. Nagaraj told, going forward, we hope from the third and fourth quarter because of this opening up of the economy. Definitely the states will start deploying the migrant laborers who have returning back to their employment, earlier employment places from their villages. These economic construction activities will start at a larger speed. So once that starts, the sanctions and disbursement will automatically pick up in the third and the fourth quarter.
Okay, thank you. That's it from my side.
Thank you. The next question is from the line of Megha Shah from Future Generali. Please go ahead.
Good evening, sir. Yes, congratulations for the set of numbers. Sir, a couple of questions from my side. First, I wanted to understand, can you tell us the amount which was pertaining to these two states? I mean, how much was it for Chhattisgarh and how much was it that has been recovered from Rajasthan?
Bhilwara agency से कितना recovery?
See, Bhilwara, the Rajasthan agency, the total outstanding was around 91 crores, and this the other Naya Raipur, the total loan outstanding is 347 crores. So the provisions, the principal outstanding on that was only 91 crores in the Rajasthan one, and on that the ECL provisioning has been done is Naya Raipur, Chhattisgarh one is 121 crores, and approximately Rajasthan one is around 31 crores. So this 31 crores in Rajasthan will get reversed during the second quarter, because it's already been, the payments have been received and upgraded. And as far as the Naya Raipur is concerned, there is an overdue of 14.81 crores for the February dues. So as per RBI moratorium policies, the asset should be, there should be no overdue as of February on 1st March 2020. So once this overdue is received, then we will be in a position to come and give under the moratorium policy and extend their repayment period for the, it gives the 2 quarters.
So you mean you will restructure these accounts if the overdue is received, is what you're saying?
Can you please be a little bit louder?
No, I just wanted to understand, so this would be, you would extend them further moratorium, is what you're saying, once this 14.84 crores is received, which is overdue?
We will be exploring that option, because first priority is to get that overdues collected from them once their recovery process or repayment from the or purchase sale proceeds start kicking in. Because unless that comes in first, because that's the due amount is around 14 crores.
Okay. Okay, sir. And how much is the COVID-related provisions that you have done in your book in this quarter and last quarter? I don't think anything is done. But this quarter, have you done any COVID-related provisions?
Yeah, can you please come again, ma'am?
Have you done any COVID-related buffer provisions in this quarter? Because 135 plus 30 around 160 crores. But in your P&L, you have provisions close to 240 crores. Or right?
Yeah. On account of other small agencies also would be there. These are the major ones.
Okay, but you haven't done any buffer for COVID-related...
We have done. Total 168 crore has been provided for, out of which 87 was provided.
87 is towards the moratorium cases.
87 was in March quarter, and the balance 81 is in the current quarter.
March quarter, your provision number was just about 19 crores or something, if I'm not wrong.
No, last quarter it was 87 crores. This quarter it is 81 crores. Total 168 crores has been provided on account of COVID-related moratorium which has been extended.
As per RBI policy, 5% to be given in two installments, 10% to be provided.
5% was done in the last quarter, March quarter, and the balance 5% has been done in the current quarter.
Okay, so if we are seeing the 19 crores number, are you saying there were some write-backs, which is why the number looks lower?
Which 19 crore are you talking about?
The last quarter. I'm talking about Q4FY20.
Okay.
The provision amount in the P&L is close to 19 crores, right? So if you're saying 87 crores has been provided in the last quarter, this number is much higher, possibly because of the write-backs. Is my understanding correct?
Yes, I think your understanding is correct, but still we can get back to you on this shortly.
Okay. Okay. The second thing, sir, I wanted to understand what has exactly happened on your yields, yields and your NIMs rather, because we are seeing a sharp contraction here from the last quarter. So last quarter, your yields were close to 10.34, what you had given the annualized number, and that has come down to 9.29. And correspondingly, your cost of funds have just come down by about 5 basis, wherein your incremental borrowing that has been done has been around 6.2 and 5 point something this quarter. So all I'm trying to understand is what has exactly happened on the yield front. When do you expect the cost of funds to come down further to reflect your lower cost of borrowing, what you're doing currently? And third, so obviously that's the simultaneous impact on your NIMs. If you can please elaborate on that. And also, I would like to know if you see the movement of the yields from Q1 20 to Q2 20. I'm talking about last year. It was 9.99 that has moved to 10.69. So could you just elaborate the sharp movement? Because we didn't have this number earlier given in the Q1 20 presentation.
If you're talking of yield,
Yeah. Because the mix remains more or less the same. It's about 96 to the government and 4% to this. The mix hasn't...
Yield actually vis-a-vis, June 2019, if you look at the yield from 9.99, it has become 9.29.
Exactly. I'm talking about sequential movement. 10.34 was last quarter what you had reported.
Right.
It has moved to 9.29. Can you just explain why is this 100 basis movement in the yield? What has exactly caused this movement?
See,
I'm talking about yield on loans, sir. Last quarter, you had reported 10.34 as a number.
Yeah.
For the yield, and this quarter it is 9.29. So, any specific reason?
One particular reason for that is the exposure is largely on account of social housing projects. Social housing projects per se are the lending rate applicable of the social housing project is per se a bit on the lower side as compared to the UI. Even if you look at the disbursement figures for June quarter, you would see out of total 2,200 crores is primarily on account of release on account of social housing projects. So the incremental increase in the portfolio is primarily on account of social housing projects, which is the reason why
in the range of 8 to 8.8%.
Yeah. So the lending rate in case of social housing projects is approximately around 875. That is primarily the reason the overall yield is being reflected on a lower side. But slowly and gradually, as the disbursements in urban infrastructure projects take place, you will see, there is a rise in that. And with
in urban infrastructure, if you can give me a range?
Urban infrastructure range would be
about around 10.5 to 11.75.
Yeah.
But whereas the housing, if you see the Q1 dispersal also out of total 2284 crores dispersal, 2200 crores is towards the social housing component, where the rate of interest is around 7.9 to 8.5.
Okay. Okay. And so also, could there be a possibility because of the NPA interest reversal, which is your interest income would have come down? Can that also be one of the reasons?
No, I don't think so. There isn't any reversal on that particular account.
Okay, there has not been any reversal. Yeah. So purely because, so what I want to understand is, so long term, how do you expect the mix going forward? Would it continue to be a similar percentage that you're having currently, 59 and 41? Or would you be skewing more towards housing, which obviously the yields would be lower, but on a ROA basis, on a risk-adjusted basis, it would be better than urban infrastructure in terms of the risk involved?
That is absolutely correct. The other thing is, rather than looking at only just the yield component, I would just also request you to look at the NIMs and the spread.
Yes, so the NIMs.
Now slowly and gradually, the impact of the lower cost of borrowing would also get absorbed in the profitability numbers going forward. The borrowing costs have primarily gone down in the first quarter of the current financial year. So that is the reason the impact of that is not actually visible in the first quarter itself. But when you go forward in the financial year, you would actually see the impacts of that getting transferred in the profitability part. And then maybe you will actually see a better NIM and the better spread numbers.
So because I understand you have been operating at a 4.5 kind of a number for the NIMs in way back, Q4 2019, which is around a year back. And then slowly the NIMs started moderating to 3.5, 3.6.
See, you need to understand the overall portfolio. If you look at the overall portfolio, when those NIMs were at the space of around 4% odd, we didn't have the 20,000 crores which were given to the government on account of EBR funding. There, the spread is pretty less. As a result of which, when you look at the overall portfolio of 78,000 crores, out of which 20,000 crores is primarily EBR funding, where the spreads happen to be very less. So if you calculate the weighted average rate of 58,000 crore portfolio and 20,000 crore of portfolio, automatically you will arrive at a lesser number.
Just supplement, our focus right now is Pradhan Mantri Awas Yojana and some of the projects in social sector like water supply. And our main motto is that profitability with social justice. If you see our numbers also, main focus is on housing rather than infrastructure.
Okay, so the NPAs...
Ms. Shah, I'm really sorry to interrupt, but maybe request you to rejoin the queue as there are several participants waiting.
I'm not asking any questions. Just can you give us the range for the NIMs, what we can expect going forward, sir? I mean, a range like 3% is what you're targeting, 3 to 3.5. If you can just give me a range.
See, I think it will be difficult for us to make a forward-looking statement on this. I think we can possibly have a detailed discussion on this subsequently.
Okay, sir. Thank you so much. Yeah.
Thank you. The next question is from Bunty Chawla from IDBI. Please go ahead.
Thank you, sir. Thank you very much for giving the opportunity. Sir, what we have observed, there has been a reduction in stage 2 from March to June. So if you can share the data, how much that stage 2 part has rolled back to stage 1?
Except the 3 accounts, except NPFC, Rogappuram and
Except for 2 accounts, rest have moved from moved to stage 1. On that, the 2 accounts which are still in the stage 2 because it is under the provisioning, we have created that because of the moratorium on provisioning. Otherwise, the rest have moved into stage 1.
Okay, okay, sir. And these 2 parts which you said, Chhattisgarh and Rajasthan, that have moved to stage 3.
They have moved to stage 3.
So, if you can clarify, Rajasthan exposure is 91 crore and Chhattisgarh is 347 crores. Am I right?
And Rajasthan has currently, today's date, it has moved back into stage 1 because the overdue has been totally received.
And 31 crore which is provided will be reversed back in Q2FY21. Is it right?
Pardon?
You have said the 31 crores provided for this Rajasthan will be
reversed
again reversed in Q2.
In the September quarter.
Okay, that's true. And sir, any reason why we have not taken this under moratorium rather than moving to stage 3, both these accounts? We have the option to move to moratorium.
No, as per RBI policy, on there shouldn't be any overdue on the 1st of March. So these accounts, this NRD, this Chhattisgarh account is having a 14 crores overdue, as I told earlier, which we are pursuing for recovery. Once that amount is received, then we will be extending the moratorium as per the RBI policy.
Okay. And sir, as we have provided for this Chhattisgarh, you said 121 crores provisioning we have done. Still any more provisioning to be provided in Q2?
No, not on this account. It has been fully provided for the year.
Okay.
If it still continues in the NPA, this provision will be there. Otherwise, that asset is having a total valuation of the security of 900 crores against the outstanding of 357 crores.
Okay, understood.
Information.
Okay. And lastly, sir, any more accounts we are seeing to be from state holdings to move into an NPA in Q3? Oh, sorry, in Q2?
No, today's date, we cannot say anything on that because
Okay.
going for, as I told, this thing also, our recovery percentages over the May billing versus August billing has improved only. So we will assume the same trend to follow in view of the opening up, of all the economic activities in the state and their cash flow to further improve upon, and so we don't today's date see any further deterioration as of now.
Okay. And sir, just clarification, as you said, 14.8 crores, if the payment of due comes, then they will be eligible for restructuring, right?
We'll be examining that option, which will ease the requirement, stress in the cash flow, which is there today because of the non-sale of the constructed units.
Okay. Thank you very much, sir. Thank you, and best of luck.
Thank you. The next question is from the line of Arvind S. from IDFC Asset Management Company. Please go ahead.
Yeah. Hi, sir. Good evening. So just two questions. Firstly, on the Chhattisgarh account, do you have a state guarantee? Because you tend to take guarantees from states, and have you invoked that?
No, it is a mortgage-based security. So the valuation, what we have done is around 900 crores is the valuation as against our loan portfolio of 357. It's not a government guaranteed loan; it's a mortgage-based loan.
Okay. And so the second question, in terms of, at least my understanding of the RBI restructuring norms, it mentions center state entities and including municipal corporations are not part of the restructuring package. Am I understanding that correct? Or as per you can
that's correct. That is the latest restructuring circular which has come after this committee 26 sector, in which in that the HUDCO's borrowing will not be eligible. What we will be considering, the Chhattisgarh would be under the earlier moratorium of 2 quarters from 1st March to 31st August. In that we will try to consider this. Not on the restructuring one. Under the current restructuring model, circular, none of our borrowing agencies except for our retail lending, the project lending will not fall under that because all our lendings are towards the government sectors only, government institution directly to the government or institution created under the state government policies or municipal corporation, which are debarred for which we are not the eligible agencies for giving restructuring in the policy.
Understood. So like you said, no entity of your borrowing of your lending book can take the restructuring which is post August 30th.
Yeah.
So have you had any conversation with some of your borrowers who are SMA 1, 2 or who are taking moratorium? Are they in a position to, restart their servicing because now they don't have the restructuring or moratorium from now on?
So as we operate our business model is we have the 21 regional offices for each state capital. We have a office in all state capital who are regularly interacting with the state government officials on this front. As it has been already mentioned in the previous conversation, our recovery has from 34%, it has gone up to 52% in the May quarter to August. So we hope with the same trend because since my regional officers are regularly in contact with the state government officials and they for pursuing the payment. So we hope by all this thing going forward, the same trend would be maintained and further improvement would be there. And as far as this restructuring is not available, that has been very well discussed with the state government officials.
Sure. Okay, that's clear, sir. Thanks from my side.
Thank you. The next question is from the line of Rahul Marathe from ICICI Prudential. Please go ahead.
Hi, sir. Thank you for taking my question. So I just wanted to understand your borrowing program. So So in the current quarter, so Q1, we had borrowed roughly 4,600 crores versus last year Q1 we had borrowed 2,400 crores, 2,485 crores. So what would be our borrowing trajectory through bonds for the rest of the year?
See, going forward, depending upon the market situation and the need for the fund requirement, we will be definitely borrowing from the bond route much because of the advantage of the costing which we are having on today's scenario. And because our borrowings are mainly on account of either to replace the existing maturity or old borrowings or when the disbursal comes. That all depends upon, as far as our servicing of our existing borrowing, we know the definite dates when they are falling due. But as far as the disbursals towards the project loans are concerned, that depends upon the progress which is taking place in the various already sanctioned projects. And so based on that, so whenever that type of demand comes, initially we go for a short-term borrowing, either in the form of term loan, the CC or CP, something, and then replace it through a long-term bond issue.
So tentatively, any figure you would like to put for the full year, that how much our borrowings would be?
It will be need-based depending upon the operational requirements going forward.
Okay. That's it from my side.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Lakshmi Narayanan from ICICI Asset Management. Please go ahead.
Yeah, thank you. Couple of questions. First is in terms of your NIMs and as well as the spreads, right? So when I track back from March 2019, the NIMs have come from 4.52 to 2.96 now, and the spreads consequently has come down from 3.14 to almost half, which is 1.54, right? So just to understand, do we have any control on these spreads and NIMs, or we are unable to clearly pencil out as to what range it would actually operate in?
No, see, basically, it's, one is like we are more concentrating on the social housing portfolio, which is lower interest bearing lending activity, and that is one of the major reasons for the reduction in the interest margin. And but few of the disposal which have been taking place now, like in the current year also, out of the current quarter also, out of the total 2280 crores disposal, 2200 crores disposal is towards social housing. But the incremental borrowing what we have done is also at a lower rate of in the current quarter because of the present prevailing market condition. But the impact of this yield will get translated only into the going forward in the financial year. So in the first quarter, because certain disbursement has taken place in virtually in the last few months, in the last month of the first quarter.
Yeah, I think you elaborated that, sir, and also that, am I audible?
Yeah, please.
And you also mentioned that there is 20,000 which is done for the other thing, right? The question is that, because this will be the, going forward, we are a socially, looking in a financial firm, and that's something which will keep coming in. So what is the range you want to actually operate in? Because as investors, it's important for us to know where do you stand. Do you take your spread as X or Y, or because that's something which is important to us. And it will be helpful if you can actually tell out as to, it's not a guidance, but actually what is your zone at which you want to actually operate in?
See, as far as the guidance is concerned, I think typically we will not like to make any forward-looking statement on, so we won't really be comfortable giving you a guidance on this particular thing. But I think when you look at NIMs and the spread, you possibly need to do some sort of an analysis of the overall portfolio. Now, when it comes to 78,000 crore as a portfolio, if you segregate that into two parts, 20,000 and 58,000 crores, 20,000 crore is just with a spread of 40 basis points, which is actually lending to the state government. It doesn't have any credit cost associated with it, but the spreads on that particular portfolio is pretty less. It is just 40 basis points. So if you actually exclude, see the year that you are talking about, when it was approximately around 4%, this portfolio didn't exist at all. It is subsequently that this particular portfolio has been added upon. So if you segregate the portfolio today also into two parts, then possibly on the 58,000 crores, you will still get a decent NIM and the spread numbers.
And plus, we look for the security of government guarantee and budgetary support. So seeing that, we reduce our risk by opting for such security, and then we also accept the rate at a subsidized rate, which we are able to give to the government agencies in the present scenario.
Got it. Okay. The second question which I have is that we have exposure to private, which we are not doing for the last couple of years. It's around 2,800 crores. Did we see any recovery from that? I know we have completely provided for it by and large. So did we see any recovery from that?
Yeah, 100% recovery is happening, but there are a number of issues are lined up in DRT, DREAT. Some of them are in NCLT. In fact, wherever we have recovered it, so our recoveries in the real estate sector is much more than 100%. That means we are getting our entire 100% principal, then normal interest. So we are getting those things. I think hopefully maybe in a 2-3 years time we'll be recovering most of the NPA.
Sorry. Just the last thing which I can squeeze in, which you mentioned that there is a mortgage-backed based loan for the Chhattisgarh government, where we have in the Chhattisgarh state, it's around 900 crore and our outstanding is around 357 crores, right? So how does it work in case they keep defaulting or they are unable to pay? What is how the process would work?
So let me just clear. In fact, total loans they have given is around 850 plus crores. So far, they never ever defaulted till date. It's almost around 8 years old loan account. So only for last couple of quarters they have defaulted. So due to COVID pandemic. Otherwise, it was a very regular account. In fact, if you know Raipur, so they have come out with a new capital, Naya Raipur. So basically, we have just funded for acquisition of land for Naya Raipur. Most of the units have been sold and regular income they are getting it. Only because of these last couple of quarters we are not able to get this.
Correct. Thank you so much. And just one suggestion is that maybe the next presentation, if you can actually split this between that 58,000 and 20,000 and show your NIMs, that would be helpful for the investors. Sir.
Okay, noted.
Thank you.
Thank you. A reminder to participants that you may press star and 1 to join the question queue. Participants, to ask questions, you may press star and 1 at this time. The next question is from the line of Karthik Gada from Value Investment Advisory. Please go ahead.
Yeah, thank you so much for the opportunity. Just wanted to understand, so our promoter shareholding is 90%, and we need to comply with the minimum shareholding requirement of a minimum public shareholding requirement of 25%. And I think, if I understand correctly, that deadline was till May. So any updates on that front?
DIPAM is working on something on that front, but because only they will be in a better position to give a call by when they are going to complete that balance 15%. So as such, company has not got any information, direction or anything to go prepare themselves on that front as of now.
Okay. If it would be possible, right? See, again, for us as investors, might be not possible to reach out to the ministry, but if you can get and then maybe publish an update on the website or on the stock exchanges, that would be a lot of clarity.
Okay, I think we will just find out the status either from DIPAM or from Ministry.
Thank you so much. Thank you. That's it from my side. Thanks.
Thank you. The next question is from the line of Lakshmi Narayanan from ICICI Asset Management. Please go ahead.
Yeah, thanks again. So in terms of the total assets, which is around 78,000 crores, and if you remove the government, which is the India, which is around 20,000 crores, and also the private, right, which is around 3,000 crores, it's around 55,000 crores odd, right? Now, in that 55,000 crore odd, if you just take that particular portfolio, how much of that was, asked for moratorium?
Approximately 26,000 crores of our portfolio has been under moratorium, which approximately has against our 77,000 crores of outstanding, 86,000 crores of outstanding works out to around 40% of this thing. Moratorium is only entirely to the government sector only. Because as far as the private sectors, non-government sectors are concerned, all of them are in NCLT or this thing. But they are all in default, NPA.
Sorry, but that 20,000 crore is not in moratorium, right? On which you get a yield of around 40 basis points. That's not in moratorium, right?
No, not that one. That is, that is being serviced by central government directly, Ministry of Finance. So that is totally untouched. This 26,000 crore is other state government borrowing agencies. Some in Tamil Nadu, some in Andhra, Rajasthan, Karnataka. None in Delhi. In Delhi only probably no agency in NCR.
Got it. So that's what I meant, sir. So the total 78,000 crore, total outstanding. In that, if we reduce this 20,000 crore, another 3,000 crore, it's 58,000 crore, right? In that 58,000.
You're right. Against 58,000 crores, it is 26,000 crores who have actually opted for moratorium. So effectively, it will work out to somewhere around 45%. If you look at 58,000 crore as the value.
Because that's the right value to see, right? Because private anyway, its money is being fully provided for, and the rest is essentially the India. Now, going forward, what is the period you get in terms of servicing these loans? Do you think, now that it's been moratorium is behind by and large, what are you seeing on the ground? Are you seeing progressively payment coming in? What's the view on the ground, sir?
Yeah, as I told earlier questions also, we saw the progress right from our first quarterly due date of May, where we recovered approximately 34% of our dues, and in the August billing cycle, we almost recovered more than 52% of our dues. So by the next billing cycle and going forward, we feel there will be more improvement, and the trend of improvement will continue in view of the opening up of the full economic activities in the various states, all over India, and the unlocking of the full economic activity, and the construction activity, and in the state governments will start picking up, because the migrant laborers have now started going back to their source of employment. So that will definitely, going forward in the third quarter and fourth quarter, and now the monsoon is also withdrawing in the stage from the next week onwards, so September end onwards, that withdrawal will also start. So we hope the state government will start to use the migrant labor who are coming back in the full capacity will start doing the construction activities, which will definitely improve upon the financial position at the state levels and seek for the additional dispersal from the various institutions, financial institutions, including ATCO.
Just to add, the people who would have been servicing the loans wouldn't have opted for moratorium, right? So it said they wouldn't have anyway paid. Now, as the moratorium is now behind us, right? So you think that the state governments will start servicing the loans completely now, or do you think they will be holding it back? Do you think there may be overdues? That's the question, sir. Because as you said, there will be some people who would have asked for moratorium. 50% of your end customers would have, essentially the government agency would ask for moratorium. They wouldn't have paid. But looking forward, how do you see?
We hope that our perception is positive only because as per the trend which is going on, we hope we will be able to do the recovery from the state governments.
Got it. And the governments for us, which states have the top 5 states for us?
Which are the top 5 states?
We have Andhra Pradesh, Telangana, Uttar Pradesh, Madhya Pradesh, and Tamil Nadu.
Rajasthan.
Okay. So this is, I'm talking about the 58,000 crore books, which is excluding the...
around 60 to 70% of this constitute around portfolio, this 6 states.
Got it, sir. Thank you so much.
I think it's already 5, maybe a couple of questions, then we will wind up.
Sure. A reminder once again to participants that you may press star and 1 to join the question queue. That was actually the last question in queue. I would now like to hand the conference back to Ms. Rati Pandit for closing comments.
Hello? Yeah, sir. Actually, there is a written query from one of our clients for you. Actually, you had said that your collection efficiency for August is around 52%. So he's asking that if 50% of the people have not paid, so will the stage 3 assets increase significantly in Q2? And in Q3, if 10% of them don't repay, then will the stage 3 number double? I mean, this is the question. Hello?
Yeah, ma'am. At present, we don't envisage. We are very optimistic.
Okay.
So I don't think anything will move up in that ladder. So hopefully we will receive next quarter onwards a regular repayment.
Oh. Other thing, Rati, is the recovery is improved even on the loans, even on the agencies who had actually opted for moratorium in the first quarter.
Okay. Understood. Okay, sir. So that's it for now. On behalf of Quantum Securities Private Limited, I thank the management for giving us the opportunity to host the call, and I also thank the participants for attending the call. Thank you.
Thank you so much, ma'am.
Thank you.
Thank you very much.